Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Welcome to Tax Bites for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Hi everyone. This episode is part one of Stephanie Wickham's chat with Paul Coffey, the founder of Coffey Accounts and a brilliant advisor for freelancers and small to medium business owners. Paul is an expert on all things accountancy and setting up sole traders and limited incorporated companies, and in this episode, he shares how sole traders often get started in Ireland, the differences between having a company and freelancing, and the best advice on how or when to transition between them. If you're an expat in Ireland or returning passport holder and looking to start your own business, this episode is for you. Paul says Ireland is perfect for it, so have a listen and stay tuned for part two in a couple of weeks, where he talks more about managing corporations, salaries, personal finance planning, and what it's like to work with him. Enjoy.
Hi everyone, welcome to this episode of Tax Bites for Expats. Today I am joined by Paul Coffey. I'm very excited to have him on because we're going to talk about a topic that comes up frequently when we talk to clients, and that is doing business in Ireland, how people tend to run their businesses when they are a solopreneur or perhaps a small to medium enterprise. But before we jump into some of the detail, Paul has his own Irish accountancy practice. He started 15 years ago when he moved over from being a sole trader to incorporation of his own limited company. And he's been in the industry here in Ireland since 2004. He is qualified as an ACCA accountant. He also has a degree in economics and entrepreneurship and a side grad dip in software localization. I'll get him to explain a bit more about what that is. But he's been working in this sector as a business mentor for the last 15 years and has a lot of experience both teaching and also working in small accountancy practices. His main work is with Irish sole traders and limited companies offering bookkeeping, management accounts, and he services some non-resident landlords as well. He's interested in share investing and markets for small investors. As in his spare time, his interests are in GAA, walking, history, economic history, and British colonial history. That's a really great, comprehensive intro, Paul. Thank you very much for giving us such an insight into your experience and your background. Thanks for coming on to talk to us. It's really, really good to have you.
No, it's a pleasure. Thanks. Thank you. And it's good to be chatting to you here this morning.
Well, I'm really glad that we have a chance to have a chat because some of our clients who maybe listen to the show regularly will know that we routinely refer some people who we work with onto you.
Yes.
And I think this is a great opportunity for us to have a chat for any new listeners or existing clients who have questions about what doing business in Ireland is like, the differences between kind of, incorporating a company versus not doing so. But before we jump into all of this, tell me a little bit more about yourself. What drew you to the work you're doing? What does your business look like?
I suppose it goes back to where I had my degree. My original interest was generally in economics, actually. And I had a lot of interest in entrepreneurship. I would have done a final project in college on my degree on small businesses. And funny enough, it ended up being about failure rates of small businesses to do with cash flow and accountancy. And funny, I was like, And how I ended up doing that, like it was a slightly negative twist on it, but it was very interesting. So I had an interest in all that. I just didn't know where to go with it. I was teaching for a couple of years and traveling and doing all that. And you mentioned I did a software. I did a diploma in software localization there just after, not long after my degree, when the IT market was going well. I said, no, it'd be a good way to travel. And I did a diploma in software localization, which is translating software from different languages. And
okay.
yeah, and you didn't have to be good at languages. It was more the technical aspects of changing how things looked and all that. And that was very interesting, actually, and programming and everything. But then the software boom deboomed, and the jobs kind of dried up. So I ended up teaching for a couple of years, doing a bit of traveling. And I suppose I wanted to do something practical. And for me, the accountancy was, I suppose, like a trade, where you actually were taught how to do particular things. And at particular points in time in your training, you knew how to do particular things. And that just appealed to me when I went to it. I liked the fact that you could start with a blank canvas and say in 6 months down the line, you knew you could do X, Y, and Z. And I found also that the exams worked for me, actually. Joe, sometimes the exams can be very difficult, but I was 25, 26 when I started, and I knew every exam I passed that I got more money. So
it's a great incentive.
which is a great incentive. So I ended up finding that they worked. I just got into a good flow with it, and I liked the businesses. And I found that I was working with a lot of small businesses. As you know yourself, Ireland, like compared to many European American economies, Ireland is a small economy, and a small business here is genuinely, small, and you can have real one-on-one interactions with people and have an impact on their businesses. So that's how I ended up sticking with the small business side. I didn't really like auditing, so I stuck with that. And then once the economic downturn came here in 2010, I went out on my own at that point.
Great thing to do at that time.
I was with the business I was working in, the practice I was working in, a really good practice, but the owner was a small practice, a really good practice, but our preponderance of clients were builders. So the writing was on the wall. So I said, you know what, now I had a few days a week teaching with DTB here in Waterford, mentoring, and I still do that, actually. So I just said, I'll go out my own then. So as you said in your introduction, majority of clients are sole traders, or, as your American listeners might know, as freelancers, and small corporate, small limited companies in Ireland. And obviously through knowing yourself, I've had a lot more introduction then through the non-resident landlords in particular. So that's kind of the bones of where I'm at. And there's myself and my wife, Catherine, in the business. And then we'd interact a lot with people like yourselves for more specialized knowledge.
And what I like about your story is, for anyone listening, because people often, they will probably have had a similar journey in their own business. Maybe they started, life takes different turns, and you find yourself with a successful business and it starts to grow. And what we commonly get asked when we talk to our clients, we may have a consultation with them, we talk about the tax issues, and the tax issues are very important. But there are often considerations that a client needs to take into account when they're coming to Ireland with an existing business regarding how that business might look when they come to Ireland. So let's maybe go back to the 101 on, the clients you work with, as I understand, are sole traders versus limited companies. Talk us through what you do with somebody when they come to you and they are a sole trader, and maybe we can kind of talk around what that means. Sole trader, you kind of reference it there, freelancer.
I suppose if sole trader is probably a more common structure in Ireland and England, actually. Ireland, UK, I suppose, we've very similar tax and legal sides, and so sole trader is a really flexible option. So essentially, I suppose the main structures in Ireland are sole trade, partnership, limited company, cooperative society, like your credit unions and your dairy cooperatives, things like that. Partnerships nowadays are probably going out of fashion. So really the main two structures that most people coming here will opt for is a sole trade or a limited company. In fairness, Ireland, I think, is, well, for an Irish person coming here, if you have your PPS number set up and a record of living here, a sole trade or a limited company are fairly straightforward options to get started on. And if you're coming in to move into Ireland, once you get your PPS number, it runs fairly, it's really, I suppose, once you get the PPS number, everything kind of...
It's easy. Yeah.
It's easy, it all works a lot better.
And actually, it's funny you say that because I was talking to somebody yesterday who has experience in the Spanish system, and her
Yeah.
observation comparing it to Ireland was, wow, there's so much red tape. It makes you realize how easy it is to get up and running in Ireland. And I actually thought that was a really good
Yes.
comment, because we train in Ireland, we deal with
Mhm.
Irish taxes. We get a bit used to the fact that it is easy, and we don't necessarily see that maybe people are anticipating a bit of red tape that doesn't exist. What you said there is very interesting. To some extent, if somebody comes here and they want to run a business as a sole trader, and I
Mhm.
suppose for the avoidance of doubt, that would mean that they run a business in their own name. So Paul Coffey
Trading
accounts, profits are your own, taxed in
Yeah.
your own hands.
Yeah.
PPS number. What else do you recommend they do when they get that PPS number and they've decided, or kind of under advice can confirm that that's the best way to proceed? What do they do?
Well, it's very simple. Like, generally for somebody who doesn't have an Irish passport or hasn't lived here before, they'd fill out the old TCRN1 form, the 4-page tax registration form, which is actually for professionals is not a bad form for people to fill out anyway, because it gives all their basic information. You register that with Revenue, and they can do that by emailing it to Revenue themselves or through an agent like myself or yourself. We literally go on to Revenue Online and email it to Revenue and to registrations, and they register that person. Or if their PPS number has registered with social welfare already, then we can go through the traditional agent link process, and they just fill out a form for us and we do the registration. So a sole trade is really simple. And to be honest with you anyway, I mean, you can register for income tax immediately. I mean, I suppose you're not breaking any law until October of the following year comes by and you haven't paid your taxes. So I mean, that's the beauty of a sole trade. It's a really flexible. You hit the nail there. I mean, one of the issues with a sole trade is there's no limited liability. You are the business. All the profits are yours, but all the risks are yours as well, to your personal assets, etc. So it depends on the business you're in. Like, you're asking me, what would you advise somebody to do? Look, I'll be honest with you. Particularly if they're trading abroad or if they're contracting with larger companies, then a sole trade doesn't really work massively for them. If you have a smaller level of trade income and it's a bit of a side gig, or if you're dealing mostly in the Irish economy, then a sole trade can work very, very well for you. And if your profits per se are not going to exceed, say, 40, 50,000, then it can work very, very well for you. Very flexible, good pension planning opportunities, and you're not subject to company law per se. You're subject to tax laws. And if you're a reasonably organized person, it's a great option and very simple. Administratively, very simple. Accountants' fees wise, a half to a third of a limited company's fees.
And I think what's interesting as well is that from a tax perspective, what we'd often say to clients is there isn't a magic bullet in having a corporate entity versus having a sole trade, particularly at certain levels of income. For solopreneurs or somebody who's a freelancer or a consultant, if they're south of, let's say, 60, 70,000 euro annual revenue, use that as a broad stroke. Cost associated with having a company, obviously benefits being your protection, but do you see any other glaring benefits for somebody like that to have a company?
There is a few. There's different layers of complication. You hit on two or three of them there. I mean, there's the obvious one. I suppose there's the most basic one, actually, for a lot of people who move into Ireland from abroad. They tend still to be operating back abroad with their companies or their trades. So they tend to be invoicing to America or invoicing to Australia or invoicing to the UK or Europe or, the Middle East, wherever. And one of the issues you have is that other countries are not set up to deal with sole traders.
Okay, yes.
So particularly in Europe, where there is a lot of bureaucracy around things, and the tax systems can be very, this is very anecdotal now, this is based on just my own talk to my clients and listening and seeing, setting up bank accounts in Europe and things like that. They don't seem to have a lot of room in their systems for freelancers or sole traders. So what they'll ask for is your corporate number, and they'll often ask for your equivalent of your company registration office number.
Right, yeah.
So straight away you have an issue that if you want to contract into, say, a large Spanish company or a large German company, they don't know how to deal with you. So straight away, it's not a case of the level of your profits. So say I've a client at the moment, she's a Spanish lady, and she invoices to Spain, but she was doing this bit work in Spain under Spain's equivalent of a sole trade. So she can do the same in Ireland. because they're set up to dealing with her already, the larger companies she was dealing with. But I would say if you were starting your trade or your business from scratch, you may have some issues around that.
That's a really good point.
So the other side of it is then employment legislation. So
Mm.
the Irish Revenue are strict on it, in fairness, and I would warn all my clients about it. The English Revenue are really, really strict on it, and they've really strict rules around it. And that's, I suppose, your employment by default. So a lot of large companies really don't want to be dealing with a sole trader, and they feel that dealing with a corporate entity gives them a handoff when it comes to employment legislation.
Yeah.
And they're probably right, but that's not my area of expertise, but that's just what I'm finding, that there is that
No,
gap there.
I think that's a really, really good point. I think what's actually really good about this is, as tax advisors, we tend to focus on the tax side of things. We'll often
Yeah,
stress the commercial issues, but you've just actually listed real life examples of when those
yeah,
commercial issues tend to come to the fore. And maybe the
yes.
takeaway is, often in life we like things to be simple and we want people to
Mhm.
give us, just tell me what to do. Oftentimes in these situations, the value of having a conversation with somebody who is actually delving into the specifics of your case cannot be underestimated, because
Yes.
really we need to figure out what you're doing, who you're doing it for,
Mhm.
why, for how long, whatever. Insert question here to actually say, you know what, on balance, this sounds like it might be the best option. And that can change, can't it? Because, obviously there's a mechanism where maybe you might work with a sole trader, and then their business grows. Do you then see them transitioning to become incorporated companies?
Yeah, and I suppose, look, you hit the nail on the head there with your question. Like one of the issues with a sole trade. So say somebody comes to me and said, "Look, I have this business. It's going to go on for a year or two, and if it goes well, I'm going to transition to a limited company." I often say to them from the start, "Would you just set up the limited company for the start? Take the hit. We might even do a deal on fees for the first year or two and see how we go, because actually transitioning from a sole trade to a company is on paper very straightforward, and you have issues around goodwill and transfer of assets and all those things. But, for most single or dual member trades to companies, it's quite straightforward. But there's a lot of hassle involved on paper. You have to get new bank accounts, you have to change your logos, you have to change your
Yes.
websites, you have to change your social media. Like really, it's actually a 3 to 6 month transitioning phase. And then the accounting side of it gets complex, because you have your sole trade account. Sometimes we're dealing with big companies. They don't change their banking processes very easily. So say if I'm dealing with Stephanie Wickham International, who employs 100,000 people, like trying to change my bank details with her, trying to change my company name details, everything, it just takes, like, they'll end up paying you into your sole trade account for 6 months before they transfer it over.
Okay, and you know what? This is a really good point, because time is money. And when you're running a
Mm,
business, you are in the business of servicing your
yeah,
clients. You are
yeah,
not in business so that you can spend time phoning banks and
yeah.
updating your content managers. So what you've just said is actually really good advice. And I distill it down to, perhaps, if you are in business and you anticipate that limited liability might be appealing to
Mhm,
you, whether from a tax
yeah,
perspective or, a commercial perspective or whatever it is, have the conversation with your accountant at the start about what that looks like now, so that you can perhaps
yes.
accelerate. That's very, very good advice. And I suppose even from a tax perspective, we love to see when people have actively carried on or acted as employees or directors for a limited company for 3 years, because there's certain release from a tax perspective that they can access if the business is ever sold or it's liquidated, subject to the usual T's and C's. So talk me through then, high level. Ignore the bit where there's the transfer, okay? Because
Yeah.
that warrants its own conversation. When someone comes to you and says, "Paul, I want to run a business in Ireland through an Irish limited
Mm.
company," talk me through what you talk to them about and the service that you offer and what they need to do to kind of go through the process. What's
Yeah.
the day one?
Again, it's like anything else. One of the issues in Ireland actually is that a company can be set up too easily, would you believe, with very little warnings. And it's a problem we encounter a lot. Someone will come to you and say, "I set up a company 3 years ago and I've done nothing with it, but I'm okay."
Mm,
And straight away, the alarm bell going boom, boom, boom. They don't know what type of trouble they've got themselves into. So
mm,
that's one of the issues. So when you say what advice we give, I suppose it starts off with a number of warnings. A limited company is like a person sitting beside you at the table, walking down the road beside you. They are
mm,
essentially another legal entity.
mm,
And if you build up enough of a positive financial record, that person, that legal entity, can borrow, can pay people, can trade all over the world. It's not something to be done lightly. That's the first thing. It's trying to get those warnings in place at the start.
And you know what? With rights come responsibilities. So for each of those
Yes.
abilities, there is a corresponding right, and they both
Yes.
have to interact from day one, potentially.
But day one, and definitely the issue with a company is that Ireland is, in fairness, like we give out about it, we give out about revenue and the whole lot, but it is a really good place to do business. Still, there's more regulation than there used to be, etc. But it's a really easy place to get set up, and revenue will take your money regardless whether you're a sole trader, partnership, limited company.
Yeah.
They don't care. You tell them, they'll take it. Happy days, and that's the way it works. But I suppose the main thing is that you would start off with a compliance issue. Essentially, we can have you in a company within 5 to 10 days, generally. So say the reality is that I use a company formations company, and we charge basically the cost of setting up the company plus administration time plus advice time. And that generally is how, and it depends then on the knowledge of the person we're dealing with. So setting up the company is easy. Some would say too easy, and possibly they're right. So really, it's a number of forms you fill out. If I send out the client big long form to fill out the directorship, shareholders, names, addresses, all the rest of PPS numbers. We apply to the formations company, get another load of forms back. We fill those out. And then generally within 3 to 6 working days, the company is done.
Do you know what's really interesting there? And there's another risk, and again, coming at it from the tax side of things, and this is an important thing to say, is that it's a commonly held view, I think, that if you go to an accountant in Ireland, or you go to somebody who's a tax advisor in Ireland, that they literally can do everything for you. And most of them will probably say that they can, but that doesn't change the fact that certain accountants and tax advisors specialize in certain areas. And probably my comment, listening to what you're saying, is I would love as well if that person, as well as considering the commercial reasons, why do I want to need this company? The accounting implications, what's it going to cost me? How do I comply?
Yes.
Company registration office obligations. If they could also just stop and pause and say, is there anything I'd like to do at the start? In other words, I'm going to own shares. Is there anybody else in the business who is going to actively work in the business who also should be given their shareholding? And what is our long-term plan for the value we're creating? Even if those questions are just asked at a very high level, you can quite quickly do things at the point where you're setting the company up that save a lot of headache down the line. Would you agree with that there kind of needs to be that cognizance?
Yeah, 100%. I mean, like even just with the shareholding, if you're married, how do you want to work that? Is your spouse going to be working in the business? If they are, then you should, I mean, look, recently I've taken to giving 50% shareholdings to spouses who are working in the businesses and making them directors. And look, part of that is around, if people are older and if something happens to somebody, the other person has full access to funds and can dealing with the bank. So it's partly a practical issue. But if somebody's working in the business and they're a director, there's much more leniency around salary payments and pensions for that person. Now, they have to be working in the business. Again, that's the reality. But, that is a fact with a lot of small family businesses, even if we're consulting, that a lot of the back office and the min work will be done by a spouse to help out the family business that might be the main earner. So that is definitely a factor. Also, the factor is if you're particularly if you set up a trading business, the tax, the retirement reliefs, the entrepreneurial reliefs, and the reality, the beauty of setting up a business, and we come back to the side, and that is, if you have a reasonably decent sized trading business that might be attractive to particularly a larger business, having a company makes it much more attractive to sell. So I'd rather buy a company than a sole trade.
Oh, all day long. Yeah.
All day long, easier to value. Also, at the end of the day, once the valuations are agreed and asset exchanges are agreed and cash, like essentially you're signing over shares, and that's it, and it can be much simpler. I'm assuming from a high level tax perspective, it's a lot easier as well.
It is, and I think it kind of plays into something that kind of comes up, is that people will often ask us the question, should I be a sole proprietor or should I set up a limited company? And we usually answer the question with another question, which is, what's your plan? And I think, broadly what we see is there is very limited ways to achieve income tax efficiency in Ireland. That's kind of broad stroke comment, but I suppose you've got pensions.
It's fairly accurate, though. It's fairly accurate.
Yeah, there isn't a plethora of things we can do.
No,
but if we have a plan for when you plan to leave or sell a business, we start to get into some of the more, I suppose, sexy planning bits where we can kind of go, well, let's think about this, because it's very difficult. We can't rewrite history, but we can plan for the future. And I think, people coming to the table looking for an immediate income tax solution are sometimes asking the wrong question. Sometimes, not always. I mean, you hit the nail on the head. I think I completely agree. We'd love to see if somebody is actively playing a part in the business and can prove it, because we love to see evidence for assertions.
You have to have proper workflow, proper email addresses, everything. It has to work. Like, it has to be legitimate. Like, there's no
prove that. Then you actually can. There's some lovely little savings you can achieve when the reality, basically just actually taking into account the reality of what's happening. Like that's the way the tax system here works, isn't it? Tell your accountant all this at the start so that they set it up.
Thanks for listening to Tax Bites for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.